All right, everybody, let's get started. Good morning and welcome to today's open forum. We have some, I see a couple of new faces in here. Some people just joined us. Dari, Cindy, welcome. We have our broker in today, Carissa. Hello, Carissa. She just makes sure, I've been telling her I've been doing these open forums for 8 years and she didn't believe me, so she wanted to check in there. So thank you all for coming today. I appreciate it. We have a special guest today to talk about some new legislation and stuff that's going on. Ashley Bedford from Apley Home Loans is here, and she's going to be talking to us a little bit about what's going on. Ashley, welcome, and we look forward to hearing what you have to say. Thank you.
Hi. I know a big topic recently has just been about seeing all the news feeds and everything on your Facebook, I'm sure, lighting up about credit scores being lower and getting a better rate. And so I wanted to address a little bit of it and the media frenzy around it and answer any questions that you might have. But I'll tell you a little bit about what it is and so forth. So this has been instilled into pricing since January. The media just caught a hold of it. It doesn't necessarily add anything directly to higher credit scores. So if you have a higher credit score, you're still going to get a far better rate than someone with a 680 or below. The goal is to create affordable housing and allow more people to qualify. And so they're eliminating some of these loan level pricing adjustments, which make the rates higher and unachievable for these lower credit scores so that we can actually get them into houses with the rising cost by bringing the rate down a little bit. So it's kind of evening the playing field more than giving them a better rate or penalizing somebody with a better credit score. Did you have any questions about it or anything else that you might have heard?
Yeah, so I saw, I was reading about how the, and I'll read you a little bit of it.
Yep.
How they're trying to, they're just justifying it, from the FHA financing association. And this is, first of all, this is just FHA and Freddie Mac, just government loans, right?
Yes. Yep. Just government loans.
Okay. So what they're saying is we didn't really raise rates specifically on higher credit scores. We just really raised rates across the board, but then cut rates for lower credit scores.
Yeah, and it's the loan level pricing adjustment. So basically you have a base price, like every rate has a base price that the lender gets credit for that. And then each thing adds a risk assessor, which is basically what the loan level pricing adjustment is, because you'll hear a lot of LLPAs. So for example, if you have a condo or if you have a lower credit score or, you're putting less money down, the higher LLPAs are. So they're trying to lower them a little bit for those lower credit scores just to even that playing field so that they can actually get into houses. Because if we continue to raise the rates, that demographic that needs those $350,000 houses, they need to get a little bit lower rate so they can actually qualify for that. As you know, there's still 8 to 22 offers on those price houses right now. So it just evens the playing field so they can actually get into affordable housing.
Okay, that's what about the and I know this isn't really necessarily a concern of ours. Are you seeing or do you think you're gonna see higher credit score people go away from government loans and more toward conventional?
Well, in general, I tell people if you have a higher credit score, most of the time we are going to go conventional because the benefit of going conventional is mortgage insurance is also based off of credit score risk on conventional loans. So they can actually have lower mortgage insurance than they would on an FHA loan unless their debt to income is higher. And I still show them examples of how their rate is still far better than if you have 680 or below. But now that FHA has also lowered their PMI as well, but you can still, if you have a higher credit score, 720 plus, you're still going to get far better mortgage insurance on a conventional loan. And there's products where you can put 3 to 5% down on a conventional loan as well.
So if someone calls you today and they say, look, I've got a 750 credit score. I would like to, I could put 5% down.
Yep.
Are you going to direct them toward most likely, and I know you wouldn't know this just off the top of your head, most likely they're going to end up in a conventional?
Yes. And a few reasons is that your mortgage insurance, once you make, I'm a mortgage broker, so I'm able to shop different lenders. And so if you make 12 payments and you end up with 20% equity, you can actually get your mortgage insurance removed off conventional. So that way your payment goes down. Whereas FHA, you can't do that without refinancing. And with the unpredictability of the market and rates, you can't get that off without refinancing. So all the people that have 2% on an FHA loan, they can't get that PMI off. Whereas if they had conventional, they can get that PMI off once they reach that 20% equity and 12 payments.
Is there any concern macroeconomically that the government is going to be, the higher credit loans are going to go conventional and the government is going to be taking over a bunch of lower credit loans?
I think the thing is right now, just from my experience over the past 16 years, is that that's already the case. Okay. Most people that have a higher credit score are going conventional unless they have a higher debt to income ratio. They're not going towards those government loans, or unless they're going VA, for example. So it's already that. I think the media has just steered it a certain way to make it look like a panic, fear-mongering type of thing, rather than this is really how it's always been. Because you don't see a lot of high credit score people going into those FHA products, because most of the time they can fit into a conventional loan, which is a better option for them overall, long term.
And over the like in the crash 15 years ago now, we're quietly bailing out Fannie Mae if there's a problem, or Freddie Mac, as opposed to bailing out banks or something. Okay. Do you guys have any kind of any questions from the crowd?
Yes, Carissa.
I didn't think it was just government loans. I thought it was conventional loans as well that would be sold on the secondary market and need to conform to Fannie and Freddie guidelines.
So the LLPAs were already adjusted on that for quite some time. But most of the time, 680 and under, unless you're putting 20% down, you're not even going to be able to get an approved eligible to even make it matter. And those were instilled back in January as well.
Okay. And then, so you're saying that it's not true that those with higher credit scores or various down payment levels will end up subsidizing some of the closing costs, upfront fees? Because I've read news articles that actually puts numbers to it.
So the LLPAs were raised across the board back in January, okay? Like just because rates went up, okay? And what they're doing is trying to level that playing field on that 680. So while the higher credit scores aren't getting that lowering, you're still going to get a far better rate that way.
Rate-wise, but what about closing cost-wise? It won't change?
No.
Or you're saying it's already changed back in January?
Yeah, so you're still getting lender credits and so forth that you can get based on those rates. Like right now, let's say you're doing even 10% down. I locked a loan yesterday, 10% down. They bought the rate down by about $6,000, and we were able to lock into a high 5. So it wasn't anything unachievable for them in those higher credit scores. Whereas if you had a 680 below, you definitely be in the higher 6s to 7s. So it's a point difference still there. I was trying to see the chats, but I couldn't see. Because I know that.
Okay, I'll tell you if we got some questions here. Level of field by increasing the credit scores. Can you explain the difference between a mortgage lender and a mortgage broker?
Yes. So a mortgage lender only has access to themselves. And a lot of times you'll find that their rates are higher, their fees are higher. They have underwriting fees, application fees, and so forth. I'm a mortgage broker, so I have about 20 to 30 lenders that I shop with. A lot of times mortgage lenders, they have overlays, which are rules on top of Fannie and Freddie's rules. So maybe they can't go higher than a 50% debt to income on FHA, for example, whereas I can do whatever the findings come back at, which is on average about 57%. So it allows for a little bit more qualifying. I have lower rates because I don't have a lot of overhead, because as a broker, we work independently. So there's not overhead. So you don't see all those extra rates, because in a lender, they have to pay their underwriters and so forth, where we're going to lenders for that. And so we're getting lower rates wholesale. I compare it to like going to Costco, right? Like you're buying more, so you're getting better rates.
Okay. Hold on one second. We got another one. Can an FHA loan do a streamline to remove PMI?
Not to remove PMI, just to lower the rate. and you can't make any like title or vesting changes either when you do a streamline. But no, the PMI cannot be removed. The only time on FHA PMI is removed is if you put 10% or more down, and then it's removed at year 11.
Okay. So it was 2014, I believe. I don't know how long you've been in the business, Ashley, but 2014 was when FHA stopped allowing you to pay down extra. Okay.
Yeah. So now when you put 10% down up front at year 11, it does come off. So 10% down or more. If you put 5% down or more, the adjuster goes down by 0.05 when they factor in your PMI. But right now it's 0.55. So it dropped 30 factor points on that as well. So it is lower, about $100 on average per loan in monthly payment.
Okay. Thank you. I put a bunch of stuff that I found on the web about explaining how the fees, if 640 to 659 puts 80% down, they're going to pay 2.25%. Hypothetical 350 loan, that's a savings of 2813. Borrower with a higher credit score, 740 to 759, pays at 0.5%.
Yeah.
With 80% loan to value, but they're paying an extra 13 since January 1, I guess you're saying.
Yeah, and
is when the rates went up.
And these are adjusters. So they're the loan level pricing adjustment. So it's not necessarily 0.5% in rate. So
Right.
It's just an adjuster to get to that rate, what that rate costs you or gets credit to, so forth.
Okay. What are the questions we have for Ashley? Don't be shy, folks.
Ashley, can you give an example of you saying that they can qualify now, for the affordable housing? Can you give an example of, like, I mean, I don't want to call out numbers, but let's just say 350. Like if they're purchasing a home of 350 and the DTI on, for them to qualify was, I don't know, usually conventional, I think you can't go over what 45% DTI?
No, I mean, I can go all the way up to 49.99, depending on the scenario.
Okay.
Because that's what Fannie and Freddie tend to allow.
Okay.
But again, depending on the scenario, it's just like, on FHA, I can go down to 500, but depends on the scenario there as well. So each individual is going to be slightly different in that risk-based scenario. So let's say, for example, the LLPAs are lowered in that price bucket and we're going that. Let's say it brings down the rate even 0.25%. That's saving them on average about $70 a month. And so that could mean them qualifying or not. Because rate has a far bigger impact than down payment. It takes $20,000 to bring a payment down, about $100. And on average, depending on the loan amount, again, an eighth in rate brings down your payment around $35 to $40. So if you get the quarter, you're saving $70, which could mean them qualifying or not qualifying.
Okay. So on average, you're saying it's like a quarter of a rate of adjustment, depending on the scenario.
Yeah, just on average, because they've lowered those loan level pricing adjustments so we can achieve a slightly lower rate to help them with qualification. And again, every scenario in those buckets, just like Ryan was had typed in the chat, that each bucket had a little bit different lowering, and it's just to even that playing field and try to get them to qualify.
Gotcha. So if you have a client that needs to get pre-qualified or pre-approved, is there anything that you would, as a real estate agent, you would tell them to do differently now, or you just would just let the loan officer handle it and try to figure out what they qualify for?
Yeah, I would let the loan officer handle it just to kind of see, because everyone's scenario is going to be slightly different, whether it's like cash available, different down payment assistance programs and so forth, like Hometown Heroes. There's going to be different factors that go into all of that. And so letting them know, I'm very good at letting them know their options and what's available to them so that they can make sure they're qualifying for the right product for them.
Okay. All right. Thank you.
Of course. Thank you.
As far as prepping your clients, Dwayne, they still want good credit. Still helps. Tammy.
Yes.
Of course.
Tammy.
Do you do the Hometown Heroes program?
I do the Hometown Heroes program.
I heard that, are they changing that to where you don't have to be the hometown hero? They're going to give it for anybody?
Correct. Technically, we're not supposed to know the date, but inside information says it's going to be July 1st, so that it will be available for any first-time home buyer. And obviously, you have to meet the income limits and so forth, but the job description will be removed at that time. And you'll also be able to get up to $35,000 now instead of $25,000.
And was the limit like 126,000 for salary?
Every county is slightly different.
I think that's what Orange County said on that sheet.
Yeah, some counties like 123 and some change,
Yeah.
but everyone's just slightly different.
Ashley, permission to share your cell phone?
Oh yes, please. That's the best way
Okay.
to call.
Well, I'm putting your information in the chat. We have people asking about that.
Yeah, even if you just have questions or I can help you guide a buyer in a certain way, I'm happy to help.
Okay. I appreciate you joining us. Where are you, in the airport or the rental car place?
I actually just got to the hotel in Michigan. One of our wholesale lenders has a big event here tomorrow, so I flew in a little bit early to go to that tomorrow.
Awesome. There you go. Sorry, her phone number got interrupted by something in between. But okay, when you said first-time home buyer, it could be that you don't own a home for the past 3 years? Question
Yes,
mark.
sir. Yep.
Okay.
Yeah. So not own a home in the last 3 years, meet the income requirement, and they can't be. So the biggest thing is the July 1st rule. It's application July 1st. So like we can't have put it with a lender on June 15th and say, oh, it came into effect. No, July 1st.
Okay.
So but if we have a contract a few days before, of course, we'll hold on to it and put it into that type of program.
Awesome. Any other questions? Sunina?
Yes. Do you do like Canadians, for vacation homes and stuff?
Yep. For national loans. Absolutely. Have
Okay.
25 and 30% down.
Okay. Okay. Thank you.
Malvis, what are the income limits for that program? Are you're seeking of the first-time home buyer, I believe? Oh, we got hands up going up right and left.
And so on average, it's about 123 to 126, but every county is going to be slightly different.
Okay. Let's go with, I don't know what order they came in. Let's alphabetically. Dwayna.
Your states that you do loans, is it just Florida?
Nope. I can do, my company can do Florida, Georgia, Tennessee, Texas, Michigan, Ohio, and we are currently almost approved for North Carolina. It may actually be approved as right now, but I'll double check on that for you.
Okay.
Awesome. Sunina, is your hand still up or? Okay.
Sorry.
No
Sorry.
problem. Tammy.
On the Hometown Heroes, what's your closing time? Like how many days do we need to close that?
You have to close it in 30 days because you actually
Okay.
have the lock is state of Florida says it's the same rate across the board. State of Florida actually sets that rate. And it must close within 30 days. You can't even lock longer than 30 days.
Okay. I just didn't know if it took longer, so I guess it doesn't.
No, super easy, simple process. Doesn't have to go to anybody else like down payment assistance or anything like that.
Is there a penalty for the hometown program? Do they have to pay that back if they sell the home?
So that is one thing that I really educate people on, just because 30 years is a long time and it is non-forgivable for 30 years. There's no interest or payment or anything like that. But if they move out of the property, if they rent the property, if they refinance the property, if they sell the property, it is due in full.
Okay. Ashley, do you know if the Hometown Heroes qualifying areas to purchase being the ones selected by the government? Ida, you might want to phrase that however you want.
There's
Yeah.
no red line for areas. So it's all Florida, like as long as they meet the criteria.
Okay. Fantastic. Lauren's got a hand up.
Oh, you're on
You're
mute.
muted. You're muted, Lauren.
Can you hear me now? I'm sorry.
Yeah.
Okay. So I heard about the FHA offering 40-year loans starting May 1st. Is that something or is that another fluke?
So 40-year mortgages will not be available for purchases. 40-year mortgages are just coming back out for modifications.
Oh, okay.
People that maybe went into forbearance, and now they stretch that across. So it is only approved for that.
Okay.
And the likelihood of it ever being approved for actual purchases is very, very slim.
Okay. Thank you.
Welcome.
Any other questions? All right. Well, Ashley, thank you very much for taking your time. Oh, wait, Nelda's got a hand up. Nelda, go ahead.
Oop.
Nope, accidentally
Sorry.
maybe.
There we go. Good morning, everyone. Just really quickly, I'm just getting my feedback wet. So I'm just restarting back to take up old customers and things of that sort. I was just wondering, what are the current market rates looking like?
It's a bit subjective. So, but like I was saying, you can easily achieve a 5 with a buy down with a very perfect credit score, like a high 5. But
Okay.
that's going to vary a lot by every borrower. Every borrower is going to have a different scenario.
So say an FHA that has about 680 credit score, because I have someone that just gave me a call. He's working with a 685 Credit Karma, so I'm sure it's probably going to be a little bit lower. What would the rate be looking like for something like that?
I can't quote an exact rate without talking to the borrower, only because you have to quote APR with that as well. So it's going to vary based on his scenario, how much down, and so forth. So if you want to have him reach out to me, I can kind of give an idea of what that will look like.
Okay, thank you.
You're welcome.
Nelda, her information's in the chat. Lisa,
Hi, Ashley. I was
Hi.
wondering, I have an investor who's looking for a second home or a vacation home.
Okay.
And they rent it in between or try to split the home and rent part of it later. So
Okay.
they have a credit score of like maybe 740 or over. And so they already own a home. So what loans could they apply for other than a conventional loan? Or is that the only one?
I mean, based on what you're telling me, they're going to want to do a conventional loan, because otherwise there's only like what's considered alternative document or non-QM loans, which are going to come with a little bit higher interest rate and down payment. Whereas on a second home, as long as they're occupying it for at least 15 days out of the year and not having like a long-term rental there, you can actually do 10% down, as little as 10% down on that type of product.
Okay, that sounds good.
Yeah.
Okay, thank you.
You're welcome.
all right. Edith, I think you took your hand down and disappeared. Anyone else have a question? Usually I have to do like a going, gone. Lauren's hand is back up. Go ahead, Lauren.
Can you hear me now? I'm sorry.
Yes.
Can you hear me? Okay, great. I just want to tell everybody that Ashley is the truth. She has helped me so many times with certain situations. She's always responsive. Like you can text her, you can call her any time of the day, any time of the night. I actually needed her last minute. She was on a cruise with her family. I don't know how she received my message, but she did. And she was cruising in the middle of the Atlantic somewhere. And she was able to respond. And, we closed within 30 days. So she's excellent. I love her. I recommend her.
Awesome.
Yeah.
Awesome. That's great to hear. Ashley, anything else you want to say about yourself and your company before you go?
I have a lot of different products, and obviously I can go by Fannie and Freddie guidelines, DU, and so forth. And it just allows your borrowers to have more options rather than just one lender. I save a lot of loans from other lenders. So if you have a situation, just please feel free to give me a call. I'd love to help and see if I can get them lower rates and lower cost as well.
Awesome. Thank you very much. Lisa, is your hand still up or is it a different question? Okay. All right. Well, thank you for coming in. I appreciate it. Safe travels. And you guys give her a call if you need any help.
Thank you, guys.
Thanks, Ashley.
Okay, bye-bye.
Thank you. Have a good one.
All right. You guys have any other questions or comments for FRI stuff?
Sorry, Ryan.
Yes.
I'm on my cell phone, so I can't see the chat. Can anybody say the number, Ashley's number out loud?
I can say it out loud if you'd like.
Please.
It's 407-394-9488.
Thank you.
Tammy from Orlando has a question. Hi, Tammy.
So if I'm going to list a house, I have seen this done before, but I just want to make sure it's okay. Can you put it for sale and put it in the lease or lease as well? That's okay.
Yes.
Okay.
As long as you have both of those listing agreements.
Okay.
Any other questions, comments?
Tammy, on
Angie
that,
from Tampa.
thank you. The last time I did that though, whichever listing you put in first, make active first, went on Zillow, and Zillow didn't allow both on there. So I don't know if that's still the case, because this was not too long ago, maybe a year or two ago. But the last time I did it, whichever one goes active first goes on. So I think I did the rental first, and I wanted to take that off, so I went back and stopped that one and restarted the other one. So you might want to check on that if you have a preference on which one you want marketed on Zillow.
I think you still have to pay for rentals on Zillow, don't you, to show up on Zillow? Is that right, Carissa?
Mhm.
I think you're muted. I didn't. Yeah.
I'm sorry, I wasn't listening. Can you repeat?
Yes. Do you have to pay to have rentals on Zillow?
No.
You don't have to pay. You
No.
did for a while though, right?
We
They were
did.
charging.
And now that I'm saying that, I'm trying to remember, we are syndicating to Zillow again for free now. And I think that is through Stellar. I'll have to check to be sure that it's not through Appfolio, our property management software, but I think it's through Stellar MLS.
Okay. All right, because they became a brokerage. I think right before that they started charging $1.50 a day or something for rental, either maybe based on the price of the rental.
I think
But
they've
there you go.
largely scrapped that though.
Okay. So hopefully that answers everybody's question. It's free on Zillow. You have to pay for the background check. Okay. Thank you, Jika. Any other questions or comments? You guys, how'd you guys feel about the what you learned today? Thumbs up. Awesome. Okay. You know, there are some, it seems like there's some long-term stuff there that kind of bothers you as a taxpayer, maybe, or something like that, that they're encouraging the government to take more risky loans. But, you know, it's not what we do that's as taxpayers. It's not as realtors. So you just need to know your stuff as a realtor and run it by, you're going to do the same thing you've done. It doesn't really affect you in that way. You're going to run them all by the lender and see what they say about what their closing costs will be and what their rates will be. So it doesn't really affect us too much as realtors. Any other questions or comments? But I've gotten a lot of questions on that. A lot of people talking about that, both on the street, in the real estate circles, and everywhere else. Questions? Anything else for FRI? Carissa's here. You guys can ask her questions as well if you want. Nothing?
I do.
Okay.
I have a question.
Yes.
She's probably gonna kill me. If you're late a day on the exclusion from the MLS, is that a huge problem? You know, like if it's 6 days and not 5, because I completely forgot. Is that an issue?
Not if they don't catch you, but yes. I mean, there's a reason for there's dates on there. So
I know.
yes. Yeah, it's important. Dates are important. Every day counts. So yes, but I don't know if their same grace period applies as it does to the listing agreement and having it on MLS, where you have, you know, a business day to get it on there. I don't know if the same thing applies to the exclusion after the exclusion.
Would they fine you?
Yes, that's what they do.
Okay.
Yeah, they can't throw you in jail or anything. They just fine you.
Jamie, I think that if it's that one that I saw this morning, that they're just writing back saying, we need you to make these corrections, I think they're probably going to give you some more leeway since you attempted to upload it in the right amount of time.
Yeah. I sent it. It did have the 2 signatures. I just missed that you had to sign that. So, but I sent that this morning. Do you sign that? Do you want that sent? Like, I could send it to you through Dotloop, or do you just want to send to like Michaela and she's get it to you?
Yeah, all those things forward to Ryan anyway.
Oh, right. Okay.
Yes, Michaela. Send it to Michaela.
Okay.
You'll get it signed. She takes them all to Carissa's desk, and Carissa signs them all day.
Okay.
Thank you. Any other questions? All right. Well, this was a very short meeting, guys. I hope you learned a lot. If you have anything else that you need, let me know. Carissa, just so you know, this is usually when I ask them if they want have anything to say, and right as I'm about to get off, like 3 of them ask questions. So going once, going twice. Any other questions? All right. Thank you so much, guys. I hope you learned something, and I look forward to hearing from you all soon. See you next week. Bye, everybody.